Join me as I dive into the world of crypto and try to turn a small investment into big gains using these beginner strategies. Cryptocurrency has been on a strong upward trend, attracting more investors eager to capitalize on its potential. However, for beginners, the volatile nature of the market can be overwhelming. That's why having a solid investment strategy is essential to minimize risks and maximize returns. First, diversification is key. Never put all your money into a single cryptocurrency. Spreading investments across different assets helps mitigate losses. Second, adopt a long-term approach. Instead of chasing short-term gains, consider holding promising projects with strong fundamentals. Third, dollar cost averaging, DCA, reduces the impact of market volatility by investing a fixed amount regularly rather than all at once. Additionally, always conduct thorough research before investing. Understand the technology, use case, and team behind a project. Lastly, set stop-loss and take-profit levels to manage risks effectively. By following these strategies, investors can navigate the crypto market with more confidence and better financial outcomes. When it comes to crypto investing, beginners often face a multitude of challenges. One of the biggest hurdles is the sheer volatility of the market. Prices can fluctuate wildly in a matter of minutes, leaving even the most seasoned investors feeling anxious and uncertain. Another challenge is the overwhelming amount of misinformation out there. With so many self-proclaimed experts and gurus touting their own strategies and advice, it can be difficult to know who to trust. And then there's the overwhelm. With thousands of different cryptocurrencies to choose from, it's easy to get bogged down in analysis paralysis. How do you know which ones to invest in? How do you know when to buy or sell? It's a lot to take in, and it's no wonder that many beginners feel like they're in way over their heads. But here's the thing. It doesn't have to be that way. With the right strategies and mindset, anyone can navigate the crypto space with confidence. So let's dive into 3 key strategies that can help beginners get started. Dollar cost averaging, DCA, is a simple yet effective investment strategy where you invest a fixed amount of money at regular intervals, regardless of market conditions. Instead of investing a lump sum all at once, DCA allows you to spread your investment over time, reducing the impact of market volatility. For example, imagine you have $1,000 to invest in a cryptocurrency. Instead of investing the full amount at once, you could allocate $100 per month for 10 months. This approach ensures that you buy more units when prices are low and fewer when prices are high. Over time, this balances out your average purchase price, minimizing the risk of making a large investment at an unfavorable time. DCA is particularly useful in volatile markets like cryptocurrency, where prices fluctuate significantly. It helps eliminate emotional decision-making as you follow a consistent plan rather than reacting to market swings. While DCA does not guarantee profits, it is a disciplined approach that can lead to steady accumulation and reduce the risks associated with market timing. The second strategy is diversification. This involves spreading your investments across a range of different cryptocurrencies and assets. By doing so, you'll be minimizing your risk and maximizing your potential returns. Think of it like a portfolio. Just as you wouldn't put all your eggs in one basket, you shouldn't invest solely in one crypto asset. By holding a mix of established cryptocurrencies like Bitcoin and Ethereum, along with promising altcoins and stablecoins, you create a balanced portfolio. This strategy helps protect against market fluctuations and enhances long-term growth opportunities. The third strategy is researching projects before investing. This is crucial because it allows you to separate the wheat from the chaff. Not all cryptocurrencies are created equal, and some are downright scams. By doing your due diligence and researching the project's team, white paper, and community, you'll be able to make more informed investment decisions. For instance, let's say you're interested in investing in a particular cryptocurrency that claims to be a decentralized finance, DeFi platform. Before investing, you could research the team's credentials, read the white paper, and look at the project's community engagement. If everything checks out, then you might consider investing. Among all crypto investment strategies, one stands out as a game changer for beginners: researching projects before investing. Think about it. If you invest in a cryptocurrency backed by a strong team, a solid white paper, and an engaged community, you're already ahead of the game. This approach significantly reduces risk while increasing the potential for returns. So to recap, we've covered 3 key strategies for beginners: dollar cost averaging, diversification, and researching projects before investing. By incorporating these strategies into your investment approach, you'll be well on your way to navigating the crypto market with confidence. Thanks for watching, and I'd love to hear from you in the comments. What are your experiences with crypto investing? Do you have any questions or tips to share? Let's get the conversation started. And if you're new here, consider subscribing for more financial tips and strategies. See you in the next video.